All right, guys, President Trump has proposed an additional $100 billion in tariffs on Chinese goods. Some suggest the ramped up talk is part of Trump's negotiating style as China announces retaliatory measures. So joining us now from Washington, D.C. to discuss is Clayton Allen, Vice President of Special Situations at Height Capital Markets. Clayton, great to have you here with us today.
Nice to be here. Thank you for having me.
Absolutely. All right, Clayton, let's dive right in. You've said that your view is that this move is a clear extension of Trump's brinkmanship negotiating style. Explain this to us, and is this an effective tactic?
This is a tactic that he's used multiple times in the past. We saw this with the steel and aluminum tariffs, where he proposes a really damaging initial proposal, and then that sort of gets walked back. And we think that that's how this is playing out. Opened his gambit, the Chinese responded and took away the leverage he'd built up. He's obviously designed this response to claw that leverage back. He's trying to force them to the table and maintain the upper hand.
Well, if it's not yet known whether or not this will be effective, we've at least seen a slight pattern. You just alluded to the recent steel and aluminum tariff. So if that is the case, shouldn't investors by now catch on to that and not react so dramatically as they have today?
I think that investors are reacting today mostly around the headline risk that this is a massive escalation in theory over what he's proposed previously. I think the other fear is that while it's recognized that this is a negotiating tactic from Trump, this runs the risk of overplaying his hand, of overestimating the leverage that he's able to build up against the Chinese and possibly creating a situation where they're forced into actually responding. I think the market's reacting to those fears. But again, I think that this is a fear that's possibly driven more by the concept of the worst possible outcome rather than by the realistic expectation of where this goes over the next 3 months.
Look, some of the big indicators that we know the president, the administration tracks in terms of job growth, in terms of consumer confidence, all of those get brought into question as a result of some of these talks. So given this negotiating style, where do you expect that the average consumer, how they're parsing through this information, how should they parse through it and kind of approach it, especially given the uncertainty that we're seeing right now?
I think for the average consumer, the time right now is to wait and see. This is not something that's going to have an immediate impact on the price that someone pays for clothing or groceries, at least not in the near term. I think that the average consumer should look at this and understand that this is perhaps an ill-advised tactic of the president, but that this is not a reflection of what's going to go into effect next week or the week following. This is still very much an example of the Trump style of statecraft, which is different than which we've seen come before.
All right, Clayton, let's just stick with this for another beat here. If you are a consumer and you're watching the markets melt down today, and you're watching the headlines, which again are all about trade wars, at what point, and can you explain how a certain product might actually become more expensive, why that is, and then is there a danger to U.S. jobs being lost as a result of companies either losing customers abroad because the products get more expensive and because they have to also increase their own spending?
Sure. So there's two main mechanisms that tariffs would increase consumer prices. The first is indirectly. Prices for supply chains go up. You have people in the U.S. that make all sorts of items, and if the parts that comprise those items that are shipped from China become more expensive due to tariffs, the price of the finished article will increase as well. The other mechanism that could see consumer prices increase is if direct sales to consumers, finished products like computers or phones or shoes, if the price of those go up because of tariffs, consumers will necessarily pay more. The risk for U.S. employment would come more from that supply chain risk. Companies in the U.S. that employ U.S. individuals to assemble things or to build things out of components shipped from China would see possibly have a less competitive advantage if the price of those shipments from China goes up. That theoretically could negatively impact employment, but at this point we're still several steps down the road from anything like that happening. The tariffs would have to be finalized and would have to go into place. And right now, it's our assumption that this is still very much in the realm of a negotiating tactic that Trump is approaching fluidly and flexibly, and it's not something that he intends to implement immediately or next week or the week following.
All right. Trump, of course, taking to Twitter a few times to reinforce his position on not being in a trade war with China, even though on March 2nd he also said that trade wars are easy to win, hey, right? So tweeting the World Trade Organization most recently is unfair to the United States. So what are the potential implications of this?
So there's sort of two implications that you've touched on there. The first is, is there a trade war, is there not a trade war? And if there is one, does Trump feel that he's able to win it? Trade war is kind of a nebulous term. It's all up to it's in the eye of the beholder. Trump obviously believes that he can win. He obviously believes that the U.S. trade deficit with China gives him a massive leverage over them. He can implement tariffs on more goods than the Chinese can, and so he feels like he has the leverage to win. Whether or not that's true, I think, is maybe an open question. The issue with the WTO is a little bit different. That's a question of how we work with our multilateral trade partners. The U.S. and several other nations have filed for consultations or petitions at the WTO, basically alleging that China is not following the rules. If we work with our partners, we could find some multilateral solution that would actually affect change. If that doesn't work, we've isolated ourselves from some of the nations that we would rely on most closely to trade with and most closely to cooperate with.
All right, Clayton, we're going to have to leave things there, but we certainly do appreciate the time here with us today. That's Clayton Allen, Vice President of Special Situations at Hite Capital Market. Thanks again.
That's a great discussion that we just had.
Yeah.
Great guest. All right.